Welcome, club members, to the inaugural episode of a new feature of your membership. We call it The Wisdom of Our Crowd. It's a series of video interviews with club members who are doing important work around our theme of recovery with equity. We're delighted to have with us today James Narron, First Vice President and Chief Operating Officer of the Federal Reserve Bank of Philadelphia. Jim, thanks very much for helping us launch this new feature.
Chris, thanks for having me today.
Okay, I'm going to start you off, Jim, with a couple of really basic questions. What does the Federal Reserve Bank of Philadelphia do, and what do you do for it?
Sure. So the idea of sort of a decentralized central bank is pretty unique in the world, and that's the model we have here in the United States. So the centralized portion of it is the Board of Governors in Washington, D.C. That's Chair Powell that you read about a lot in the press. But in addition to that, you remember the time that we were thinking about a central bank was a lot of work between, thinking about how much central control we wanted versus how much regional control. And that's where the idea came up for having regional reserve banks. So Philadelphia is one of 12 regional district reserve banks in the Federal Reserve System. So we represent most of Pennsylvania, really out to Altoona and Johnstown, the southern half of New Jersey, and all of Delaware. So this is really important when you think about banking conditions here in the area, when you think about economic conditions. So we can go into Washington, D.C. With the other reserve banks and the Board of Governors and think about monetary policy. And of course, we all have access to the same data, but it's really the stories, what we're hearing from bankers, from business owners, from community leaders, not just here in Philadelphia in our region, but in each of those district reserve banks. That's really the unique flavor that we bring so that we can not only see the national data, but really see the microcosm of what's going on in the United States and just make better monetary policy decisions there.
And your role with the Philly Fed?
So I'm the Chief Operating Officer. So when you think about the Federal Reserve System is really a bank for banks. We provide financial services, we supervise financial institutions, provide financial services for banks in the industry, supervise those financial institutions. So that and I, of course, do all of this economic research to support monetary policy. So as the Chief Operating Officer there, I'm really in charge of oversight of our payment systems that we provide here in Philadelphia. So think about cash payments going out and getting filling up ATMs or bringing those deposits back into process, or the lending that we do for financial institutions at the discount window. So that's primarily my role as the Chief Operating Officer there. And then of course, all the support functions that go with that.
Right, so let's dig into a little bit into the research that the Philly Fed has been doing about the particular nature and impacts of this recession. Jim, how would you compare this pandemic recession triggered by a health crisis, the way it's unfolded in our region compared to the Great Recession, which is triggered by a global financial crisis?
Sure. So Chris, I was at the Federal Reserve Bank of New York during the financial crisis. I worked there for about 10 years. And so the way we could see the financial crisis unfolding, it was a much longer lead up to that. We could see some pressure in the housing market. We could see some of the financial institutions starting to struggle with liquidity. So there was at least a year, leading up to the financial crisis where we were aware, there were pressures in the economy. And while the week that Lehman Brothers failed was incredibly intense at the organization, the recovery from that was incredibly long. It was really until about 2018, 2019 that we got back to, what we would consider a full employment. So it was a tremendously long recovery from that. So the dip in the recession would have been a little slower to happen. The recovery, that tail, much longer. Chris, when you look at this, the sort of the drop off in the economic activity was quick and sudden, The question is, how quick will the recovery be? So when you think about how this, this recession happened, you're right. It's a sort of a pandemic, a health crisis that's led to a financial crisis. And at the beginning, it was really demand driven. In the beginning of, sort of late February, early March, we could see in the data that demand was dropping off. You could see it in expenditures at restaurants and other things where you could tell the public was getting a little nervous. Ultimately, when state and local governments started doing government-ordered mandates for, shuttering businesses to help protect it against the spread of the virus and social distancing, then it becomes sort of this supply-driven crisis where businesses just aren't able to open in many cases. And what's really interesting about our region for this is Pennsylvania in general and Philadelphia in particular were pretty heavily impacted compared to our neighbors, say Southern New Jersey and Delaware, where the lockdowns weren't quite as severe.
So would part of that differential impact also stem from how important hospitality and other service sector jobs are in the Philadelphia area as a driver to the economy?
Sure. We absolutely see that. You still see this in the recovery today. Hotels in Center City, aren't, just, quite, certainly not even near, a full recovery there. So there's a big emphasis on, sort of if you think about the types of businesses that were impacted by this, entertainment, hotels, travel, personal services, you get concentrations of those more so in big cities than in smaller cities and rural communities. And also because of just the concentration of people and businesses and the social distancing you need. You can see in the data that the shuttering of businesses, particularly small businesses during the mandate, was just a little more severe in some of the larger towns than in some of the regional communities. And some have bounced back. Demand was, quite high for hotels and restaurants at the shore, for example, this year. So we'll see the recovery being a little bit uneven as different communities, different cities are able to ease some of the restrictions and let businesses reopen.
Now, the drop in national employment, I also believe regional, was a little swifter and a little steeper even than during the Great Recession. But some of the research you shared with me before we got on here suggests that at that point, both employers and employees expected the unemployment to be temporary. There was sort of an understanding that, well, we'll get through this pandemic and then it'll come back. Has that proved out that a lot of the job losses were relatively temporary?
Mm-hmm. So not only job losses, but even, businesses. So there was the expectation that things would, open up and would bounce back pretty quickly. And to some extent, that's happened. About 60% of small businesses have been able to reopen, but not to full capacity. So you get about, say, 2/3 capacity, in terms of revenue that they're generating. So I think about, having dropped off some clothes at the dry cleaners last week. And while my dry cleaner was exceptionally pleased to see me there, I could tell by the number of articles, sort of waiting to be returned to customers that the activity, just hadn't quite returned. So you see that on the small business side in particular. And then on the unemployment side, while the number of requests for unemployment insurance, absolutely spiked. We've seen a pretty swift, but not full recovery. We've got unemployment now, at least at this point in time, down below 9%. But Chris, I'll tell you, just the number of unemployment cases was just overwhelming for the state agencies. It's really triple anything they'd seen in the past. And like a lot of government institutions, they've got some aging IT infrastructure, so it's just hard to keep up with the demand there. And then also think about the sort of the way unemployment is structured in general. it's really not designed to deal with the kind of unemployment you would get in a pandemic. So when you think about unemployment insurance, it's, are you able to work? Are you available to work? And are you looking for work? But what if you're sick, or you've got to deal with the childcare issues because the school is closed, or you're in quarantine, or even in this case, you're just self-employed? Unemployment insurance just wasn't designed for those types of issues that we really experienced here. So even the number of unemployment cases, being quite high, might not have addressed, the number of folks that, just weren't able to work, but otherwise wouldn't have qualified for unemployment insurance.
Right. Quickly, as an aside, your reference to the dry cleaner just reminded me that I left a blazer off at the dry cleaner right before the shutdown, and I've never picked it up. So thank you for that.
I think they would be glad to see you.
Yeah, hopefully they haven't sold it off. But as you know, our theme for the year with the club is recovery with equity. So I want to spend a little time lingering on the equity piece of this discussion. We saw, just in terms of health outcomes and access to care, that COVID-19 and the virus accentuated some systemic inequalities, that people who were poor had less access to care and had less good outcomes if they did get sick. Are we seeing in the world of employment and business similar kinds of doubling down on systemic problems being triggered by this recession?
We're starting to see some of that. The Federal Reserve had been doing some work even prior to the pandemic on the types of what we call opportunity occupations, the types of jobs that can earn you a middle class wage or income, but where you didn't necessarily need a 4-year college degree. So think about things like a diesel mechanic, very well-paying job. You need some technical training for that, but you don't necessarily need a 4-year degree. So we had piloted a program working with Comcast to try to provide, we didn't provide it, a third party did, the kinds of technical training that citizens needed for the types of jobs that Comcast had available. And of course, Comcast was quite interested in getting the workers into the workforce there, so much so that they actually funded the training. And they didn't do it out of their philanthropy budget. They did it out of their HR budget. So there's a real business case for businesses to think about, how do they partner with organizations to provide the largely technical training that we're going to increasingly need, to get to fill and build some of the skills in the workforce that we'll need. So those are the types of things that we're looking for, really skills-based hiring, rather than, looking for a degree, for example. We saw this during, the last financial crisis. People were sort of amping up the degree requirements for jobs that really didn't need them, but they were doing that because they could. So we've got to think differently about how we do hiring, more skills-based hiring in the future.
One of the things that factors in here that I know the Philly Fed has done some research around is automation. We're all getting used to doing our work and living our lives on Zoom, which is essentially a technological substitute. And I want to get into the impact of this telecommuting in a bit, but just looking at people who had sort of service public-facing jobs who now face a threat from automation because the pandemic has forced their employers to find a different way to do business.
Yeah, so we've been doing some interesting research on here to try to think about regionally what percentage, what number of jobs might be susceptible to automation, to displacement through automation, and then what segment of the workforce there. So we're seeing women, minority candidates, Black and Hispanic folks, younger workers, really at higher risk of being displaced by automation. And you'll see some of that during the financial crisis now. And we're becoming more and more accustomed, as as either coworkers or citizens in dealing with this automation. It's probably 20 years ago that we wouldn't have thought of going through, self-service checkout at the grocery store or at a retailer. And now we're much more comfortable with that. So we'll see a lot of this happening now, where either you weren't able to get workers into the workforce because of social distancing requirements and you needed to rely on automation, or folks just weren't available to work and you needed to rely on automation. You'll see some of that happening now. The question is, what's going to happen here? Is that going to be temporary, or is that going to be permanent? So we have some anecdotal data that suggests, things like this could be a little more permanent. So we're hearing from our banking contacts that, for example, of course, people visiting the bank branch, that's been off, for a number of reasons. So what have people been doing in the interim? They've been downloading that banking app that they'd been hesitant to do before, and are starting to use that. And so some of the bankers that we talk to say, in terms of getting their customers to adopt some of this digital technology, they've made about a decade worth of progress in about 6 months. And anecdotally, they think this is going to be sticky. They think, even consumers in sort of my age demographic, above age 50, will continue to use these banking apps in the future. That's just one example, but I think we're going to see this across a number of segments.
Right, and every time you drive the Pennsylvania Turnpike, you see sort of a glaring example of that. I doubt those toll collectors will ever be coming back.
I was a great benefactor of this. I was out of the country as the pandemic started happening, and by the time I returned to the Philadelphia airport, the parking lot was deserted, and there were no toll takers there as I left. So thanks to the Philadelphia airport, I got about $80 worth of parking free and long-term parking.
Jim, I don't know how to break this to you, but I think Shelley Cameron is a member. If she watches this, she might be asking you for those $80.
She'll be looking for me to send in that payment.
Another factor in maybe differential impacts due to poverty or lack of access is broadband. When we're all trying to do our work from home on a computer, you need broadband, and there are some real disparities there, right?
Absolutely. So we see this in a couple of areas. A lot of people call it sort of the digital divide. So think about workers. Many workers are able, to work remotely, but Black, Hispanic workers, some young workers or lower wage workers have the types of jobs. So you think about, maybe a restaurant, personal services like my barber or a hairdresser, that just can't provide those services online. So there are certainly sectors of jobs that just can't be done online. So you have to think about who's going to be impacted by that. Secondly, even if you were able to sort of convert your business online, do you have broadband access? Do you have a computer to be able to do that? Do you have the digital skills to do that? So we're going to see that some with businesses. You're also going to see it with folks looking for work. If you're looking for work, if you can't go to that in-person job fair anymore, how are you going to find that job if you don't have broadband access? So in Philadelphia in particular, our uptake on broadband is a little bit slower than I think what you'd see nationally. Comcast, has just done some amazing advertising in the last several weeks. I've seen it a lot on TV, with their Internet Essentials program. But the folks at Comcast will tell you, even when the service is free or nearly free, it's just difficult to get folks to sign up for that. Sometimes you just don't have access to a computer. Sometimes you don't have the digital skills. One of the things in particular I'm really worried about now is sort of the homework gap, or I think what Pew would call the homework gap. And that is, those citizens, especially with schools now converting to online, who, of course, suburban households more likely to have broadband access, have computers, have the digital skills. So what neighborhoods, what sectors of the economy are going to be impacted by this? So these are things that we're going to want to really focus on, because if we get these concentration effects, in particular neighborhoods where they have not only citizens that are more at risk of being displaced, either out of work or displaced with automation. You get those small businesses that are going to get be impacted by this. You don't have the broadband access. Even the moratorium on evictions. If those things go away in December, what's the impact going to be on some of our lower income communities or neighborhoods across the Philadelphia area? And Chris, as we start to think about this, while philanthropy has been great, the money will run out, at some point. And so I think we're looking, toward the end of this year, this confluence of, perhaps some unemployment insurance running out, some of the philanthropy monies running out, maybe the moratorium on rents going away. So thinking about public policies that will help, in these particular areas is going to be important.
I wanted to talk a little bit about one other area where the playing out of the pandemic revealed and also to a degree reinforced some inequalities, which is access to capital. And talking about, say, the payroll protection program, I've certainly read some reporting that suggests that the money, and this wasn't because of any nefarious plan, it just sort of was baked in the cake, that in trying to shove that much money out the door that quickly, the federal government working with banks and then the banks tended to give more of the money to customers whom they were familiar with, who they had established relationships with, and that often left out the smaller minority or women-owned businesses because they didn't have those deep relationships with the banks. Have you seen that in your world?
We hear anecdotal evidence from customers who say perhaps they were with a financial institution, but they weren't one of the larger clients there, where there was just great demand for PPP loans, and they might not have got granted one of those the first time around. Then looking for a relationship perhaps with a community bank where they would get access to one of these loans. To be fair, PPP loans absolutely made a difference. That was hugely impactful. But you're right. We hear from some businesses it was just difficult, to get a loan because demand was so high. But Chris, these are just the businesses that even had a banking relationship. When you think about a lot of small businesses, the single proprietor, somebody that's got one or two employees, oftentimes they didn't have even a banking relationship. So how would you access the PPP loans in that case? So while those loans were absolutely great and really did help many businesses, you're right, some small businesses, even with banking relationships, had difficulty getting access to those loans. And if you didn't have a banking relationship, it was near impossible, to establish one quickly and get one of the PPP loans.
Thinking in specifically about our region, the Philadelphia region, and its ability to recover, we talked a little bit about how the hospitality service sector was hit peculiarly hard because of the nature of this recession. But I want to talk about something that everybody knows is one of the main drivers of our economy, which is eds and meds. And there's some interesting threats there. Obviously, various universities and colleges around the region have tried different approaches, particularly with this semester. Some thought about bringing students home and then decided not to. That's what pretty much happened at Penn, where I teach. So colleges are going through, I don't know if it's a midlife crisis, but really the whole question of, is this tuition I'm paying to go to an elite college, like many of those around Philadelphia, is really being called into question by a lot of students. So there's that concern about, is the future of our elite colleges around here as bright as it might have seemed? And then with healthcare, it's been a strain on the system. Certain problems with the healthcare system have been revealed. And then we have that looming Supreme Court case, which is, due to be heard right after the election, that could invalidate the Affordable Care Act. So it seems like there are all kinds of factors bearing down on the bell cows of the local economy.
So Chris, let's start with education, and that's absolutely true. When you think about it, Philadelphia is situated just incredibly well in terms of the number of really great higher education institutions we have here. I think more than 100 really fantastic universities here in the region. But you're right, students are going to be demanding more, if they have to, take their classes online. But we know many universities have offered, either waive the student activity fees because they haven't had access to those, or have lowered tuition. In a couple of cases, we know universities have raised tuition. But we're seeing this mix of, even within different institutions, higher education institutions, a mix of who's on site, who's off site. I had dinner with some friends the other night who are mentoring in the Wharton MBA program. So they match a previous grad with an incoming student. She's paired with an incoming student from Texas. So in her first Zoom call with the student from Texas, they weren't in Texas. Even though they weren't going to be in class, they flew to Philadelphia, rented an apartment here, because they still wanted to be part of the community, more of a cohort with their other students. And so I think we'll see a lot of that, that students are still going to be looking for that college experience. Hopefully this will be just a semester, perhaps two of this, but the universities are coming up with pretty creative ways to deal with this. On the meds side, we're sort of seeing two different things here. One is, many of the hospitals and providers there, are really struggling with folks just not getting out and taking care of some of that, those elective procedures, important, but things that you might want to put off, like a dentist checkup or an annual physical. So we have got to get to a point where folks are more comfortable doing that. But this insurance piece that you've talked about, Chris, is really, really important. I talked about sort of neighborhoods, small businesses, people, that might be impacted by this. If you're a lower wage worker, even if you're living in a neighborhood that's got modest rents, so imagine a zip code where the average rent is about $900. You're already contributing a higher percentage of your income toward rent than, many other neighborhoods. So just being out of work, is one huge impact. But folks in certain zip codes are also less likely, to have the financial means, to pay for, sort of that unexpected expense there. So you take insurance away from that, and it's just going to compound sort of the impacts on low to moderate income consumers or neighborhoods around the region.
Yeah, the trapdoor beneath their feet gets a lot larger and a lot shakier.
A number of households, in Philadelphia were already upside down, even before the pandemic. I think our research suggested maybe 30,000 households might have been sort of underwater, not quite earning enough, to keep up with bill payments. Our research suggested that might have doubled in the early days of the pandemic and taken about 75,000 households and sort of put them upside down in terms of earnings compared to with their monthly expenses.
Yeah, so middle class foreclosures were sort of an emblematic result of the Great Recession a decade ago. All those for sale and, sort of those people who would leave the keys, send the keys back to the bank. This time, obviously, as you just alluded to, foreclosure and eviction are a big threat, forestalled a bit by the CARES Act, but now we're waiting to see if anything else will be done by Congress and the president. How concerned are you about another major foreclosure crisis in Philly?
So it's got to be a great concern, just not only in Philadelphia, but around the region. So Chris, while our moratorium has been great, on evictions right now, we can see in the data other cities around the country where they've lifted that moratorium. We're seeing the eviction rates, starting to tick back up to sort of pre-pandemic levels. So obviously you don't want that. When we get, particularly in neighborhoods that are, sort of vulnerable to, the types of occupations, where, folks are at risk of losing, work. And then you double on top of that, evictions or foreclosures. Recovery in general, can take, quite a long time. We talked about the recovery from the 2008 financial crisis. So if you concentrate that in particular neighborhoods, it just compounds the effect and how long it takes a neighborhood to recover. So certainly it's not in anyone's interest to do that. So we have to think smart about policies that we'll need to put in place, to really transition those workers that are going to be impacted here, to make sure we get the support that they're going to need. So again, unemployment insurance has been great, but we also have to think about sort of longer term, if we need to do some jobs, retrain or different skill sets, how do we do that? And how do we match those folks to really the new opportunities that are going to be available coming out of the pandemic?
Okay, Jim, one last question from me, and then, I'd like to hear any wrap-up thoughts you have. But I'm thinking back to, say, a day in late January, early February, unseasonably warm because of climate change, but I'm walking through Center City, and I'm walking through this very vibrant, urban context. There are surrounded by new and old office buildings that are full of information and knowledge workers. Some of the newer buildings have co-working spaces full of young people from the creative class. At lunch, the streets are full of people going out to grab a bite to eat, a cup of coffee, or do a quick bit of shopping. Is that ever going to come back? Or with telecommuting and things that people have learned about working from home in the last 6 months, is Center City ever going to be as vibrant on a weekday as it was 7 months ago?
So Chris, I'll tell you, these are my own views. It won't necessarily, represent, the views of others. But Chris, I think absolutely yes. The draw of the city, the interactions, we hear a lot from business leaders that, certainly they're going to be more flexible to telecommuting in the past. But the idea of the office, the interaction, the sort of the serendipitous encounters with other employees, that's the sort of the exchange of ideas is just incredibly important. That's hard to replicate. It's not impossible, but very difficult to replicate online. We might see different concentrations of workers in the Center City. We might see shifts in where folks are choosing to live. People are still going to want to live in the city. The amenities will be back. The arts will be back. Culture will be back. Theater will come back. It might not be until mid next year sometime, but it will be back. Folks might be comfortable living a little bit further away from the city. So might choose to go sort of beyond a suburbs and with a more flexibility in their schedules. But absolutely, I believe strongly that the city will absolutely bounce back. Other cities around the country will as well.
Yeah, there was the wonderful story in the New York Times on the front page yesterday about New Yorkers moving up to a small town in Vermont, where they discover A, it's cold, or it will get cold. B, bears get into your car looking for Cheez-Its and tear your car apart. And C, there's almost nothing to do. It's really hard to find a latte up there.
Right.
So we'll see how many people decide that Vermont is a permanent option.
Yeah.
So Jim, just generally, any other things that I failed to ask you about that you think it would be important for club members to know about what the research is telling you all?
One thing that we didn't touch on, but I think is going to be important, is as we start to go back to work, doing that at the same time that childcare becomes available, children are in school. Certainly you can get out to that job, but if you're a working parent, thinking about how do I either have my, child, participate in online schooling if they're not able to get into school is important. I think Philadelphia is starting to set up some drop-off centers where, parents can, drop off their child to have a little bit of help with the online learning. So policies like that, I think, are going to be important. But childcare is a big, big issue for working parents right now, and we recognize that. And again, we've got to think about policies that will help there.
Great. Well, Jim Narron, thanks very much for helping us launch Wisdom of Our Crowd. I want to tell everyone that after you've watched this video, if you have thoughts or comments, we'll set up a discussion space on our new platform, Forum B, where you can have your own discussion about the things that Jim talked about. If you have questions for Jim, we'll forward them to him. And if he has some time while he's saving the local economy, he'll give you some answers. So thanks very much, Jim. We appreciate your time.
Thanks, Chris. Thanks for having me.